Welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. As usual, lots to cover today. First up, we will take a look at the broader markets and see where did we close for the week. And then from there, take a look at some of the more impactful headline news that drove price action this week. There are areas that are, I would say, holding up. Actually, they are. They're holding up really quite well. We'll go ahead and review those, as well as individual stocks within those areas, and discuss some of the reasons why these areas, they're not all defensive in nature. So stick around for that. Also, we are going to review intraday charts, and this is going to be not only for strictly for day traders. I find it interesting. I am not a day trader, but I like to look at these stocks that get super oversold given the current market conditions. And we'll share with you ways that you can potentially capitalize on that in a short term basis. So let's go ahead. Building your watch list is something as well that we will touch upon, but not entirely focus on. Here are some of the headline news from last week, and certainly front and center are the earnings reports from both Walmart and Target. Not only did they report weak numbers, they guide it lower going forward. The reasons were similar, not exactly the same, but for sure, high inflation was an impact, supply chain issues, but in essence, a general slowing of growth. And of course, that in turn was on the heels of Amazon's very similar announcement a couple of weeks ago. So it definitely did have quite the impact on the markets. We'll get into that. Also, ahead of those earnings reports, we did have on Monday retail sales, and they did rise in April. That was good news. Industrial production came in. It was on the rise for the fourth straight month and above estimates. So, as a backdrop, those two figures were certainly constructive as it relates to the economy. However, the earnings reports and other factors superseded those economic numbers. We did see housing demand later in the week. Rising mortgage rates are impacting housing starts as well as new construction. So we that is certainly a piece to the puzzle as it relates to the markets last week. And then on today, Friday, the leading economic indicators did fall in April, pointing to a potential softening in the economy. But I will share with you very quickly what the markets did today that was actually quite constructive, and talk about what to be on the lookout going forward. Next week, the key elements are going to be the Wednesday release of the Federal Reserve meeting notes. And then also, we are going to get some pretty critical inflation data later in the week, the core PCE inflation data, of course, inflation on the tip of everyone's tongue. So, key event due to take place there next week. So let's go ahead and take a quick look at the broader markets. And I can go ahead and share with you how we closed the week, because we certainly had a very interesting close to the week. We will take a quick look at that. And here we are with a daily price chart of the S&P 500, and we did undercut the recent low from last week. However, today's price action, we were able to close the week above that, certainly constructive. However, your outside momentum indicators, the RSI, is and remains in negative territory, as well as the stochastics, very much a downtrending phase, and it remains in place. From here, I will go ahead and share with you a view of what took place today, and it was rather impressive. This is a daily price chart view by the hour, and you can see how we were able to close the Dow in positive territory, as well as the S&P. Nasdaq not quite able to make it up into positive territory, but certainly constructive. And this type of price action, where we open the day down heavily and are able to close on the positive side, is constructive. We would need to see that several days in a row in order for it to be really impactful, but certainly well worth noting. From here, we can take a look at a daily price chart of the S&P 500 and see that same, capture that same, in essence, turnaround that took place into the close. We are, of course, coming out of an oversold position, but nice turn here on that MACD. So very interesting setup into the close for the week. From here, let's take a look at some of those underlying sectors, the 11 sectors in the S&P 500. They are listed here. We have a 2-month daily price chart view, and I've gone ahead and added that relative strength indicator. We're going to sort this in descending order. And the purpose here is to uncover where there may be relative outperformance. Ultimately, at some point down the road, as the markets, if they do continue to firm up, we are going to be on the lookout for non defensive areas that may continue to potentially move up to the forefront. But for now, it is evident that the strength that's taking place is commodity related, energy stocks doing really well in a high inflationary period. Healthcare is viewed as defensive, as are utility stocks. And materials, I'll get into that in the next slide as far as which areas are performing well, but it does also have a more defensive angle, if I may. So, energy, again, as mentioned up here in the forefront, quite volatile. This is indicative of what we've seen in the broader markets. However, it was one of only three e- uh, sectors that were positive for the week, and it was up the most, 1.2%. That's relative to the S&P, which was down 3.3%. So nice strength being shown here in the energy sector as we remain above this 10-day simple moving average, RSI positive, trending upward, and likewise with your MACD moving average convergence divergence. So let's go ahead and move forward. I did mention two, actually three industry groups were positive, and healthcare was one of them. Still a bit sloppy. I'm going to pull up a bit of a larger daily price chart here and see that we did hit a new high back here in the beginning of April, and it did give up quite a bit in the way approaching this prior recent low in late February. But this week was very interesting in healthcare, and that will be unveiled as we proceed through these various industry groups, and I share some stocks with you that are holding up well. Let's take a look at one area that just got blown away. It was up there at the forefront over the past several weeks, and this is consumer staples, and just a really swift decline here. Not a lot of people saw this coming, but if we can certainly take a minute and take a look at some of those underlying stocks that were hit the hardest. This is all about high inflation. Target, Walmart, actually talking about this concept that consumer spending may be slowing, growth is slowing. So some of the names that are hit the hardest were those staples stocks that had been holding up well because of their high yield, their growth, but they thought that eventually at some point in time, consumers may pull back in some of those staples names and the companies in there. So from here, let's move forward and take a look at some underlying ETFs that for me I find very, very useful as far as really getting your arms around what is taking place, where that relative strength is. And this is a very quick and easy way to do this. It's a 2-month daily price chart view. And as I go through these different areas, I'll share with you their relevance. Of course, Brent crude, that price of oil is going to have a lot to do with the energy group. There have been periods where the price of energy companies does not reflect the price of oil, but there's been a real synergy of late. So we can see elevated oil prices, $111 per barrel, which is one piece of the puzzle. Certainly earnings reports for these energy companies are another that is really propelling these stocks higher. Let's take a look at the US dollar. It did pull back this week, and that is good news. I'll share with you one area as it relates to being impacted, but a strong US dollar can be negative for some of these multinational companies that export globally. From here, I will take us to that one area that had a decent week in after having several weeks of non-performance or underperformance. This is GLD gold share sector. So over the last couple of days, it's bounced here. Generally, in a rising dollar environment, gold stocks do suffer. So we'll see if we can get a continuation rally here in that gold sector. Another area that was elevated this week is volatility. This is the VIX index. We can see that it did close the week just below that 30, but still quite elevated for a normalized market where investors have confidence and there's not a lot of uncertainty. Volatility generally is in about the 18 range. So we do certainly remain quite elevated. A lot of that is based on certainly fear as it relates to a potential recession and growth factors, as well as rising interest rates. So, moving along, I mentioned healthcare having a positive week, up almost 1%. And I'm going to share with you what I view as a very unlikely one of the reasons, and that is the fact that biotech stocks were up 2.3%. And this is relative. I use IBB, and that is what we are looking at here. And that's relative to the NASDAQ that was down 4.2%. So the surprise here is because biotech stocks generally do not fare well in periods of uncertainty. A lot of these companies don't have earnings in place. I will share with you as we move on the main companies that are driving biotechs higher. There's actually, interestingly, a lot of vibrancy taking place as it relates to FDA approval. And I'll share with you again as we move forward here. And of course, as usual, you want to make sure that you're not in these underperforming area. Bank stocks down less than the broader markets, but still in a very pronounced downtrend there. And then one other area that has been very impactful has been yields. This is the yield on that 10-year Treasury note. And we can see, similar to the dollar, that it is receding. And that is generally good news. It could be attributable to why we did see a late day rally, certainly, but I would attribute that more to an oversold condition. But certainly, we want to see interest rates recede a bit as it relates to their impact, negative impact on growth stocks. So, from here, what I did want to do is share with you. First up, we will take a look at some of those intraday charts that I mentioned to you. So let's see if I can get up to my list that I put together for today, and we can take a look at a couple of these companies that really did get quite oversold and are potentially reversing, and then share with you what to be on the lookout for. So, first up, we'll take a quick look here at Netflix. And what I am sharing with you here is when you see these stocks have that very significant drop. We had several other retailers outside of Walmart and Target experience drops, Ross stores among them. So when you have these huge drops on big volume, oftentimes, as it was with Netflix, you will experience a multi day downtrending phase, which in turn will push that stock. Now, we are looking at a 1 hour price chart, just to remind you, intraday. And this is going to be for certainly more nimble traders that are uh, inclined to trade intraday or multi day. But we can see this oversold position. And what I'm on the lookout for is that stock's price to first move up above the simple moving average, because you can see how it acts as resistance. I have a 5 and a 13-hour simple moving average here. And we did get that break above at the end of April with Netflix. However, we didn't get a confirmation, certainly on that RSI peaked up above 50, but nothing monumental. We did have a secondary and yet a third downtrend reversal attempt. It was not until we did get that RSI into positive territory, but you can see you really only had, this is a 1 hour price chart, and it happened to be, in essence, an end of day, May 5th. I'm pretty sure you guys remember that day when we had that significant rally, that relief rally in the primarily growth stocks on that day. So let's go ahead and move forward because what I do want to share with you is what you want to be on the lookout for as confirmation that any kind of downtrend reversal has legs. So I'm taking us to mid May. We have that break above those moving averages. We get that nice RSI into positive territory, but take a look. Your MACD has now gone up that net neutral zero into positive territory. And we did have a Friday into Monday rally for Netflix. And let's see if I have another example here that we can walk through as it relates to using historical precedents. Here we are with Facebook. This stock had actually a different uh, look because what we are looking at here is a general decline that was taking place with Facebook going into the release of their earnings. Now, interestingly, their numbers were not anything to get excited about. Merely Facebook mentioned that their user base increased modestly, and that was enough to get people back in. I would argue this oversold condition had something to do with it as well. So let's take a look at those dynamics as it relates to reversing this downtrend. Big gap up, we get that positive RSI, and we get that MACD now above that net neutral zero into positive territory. We can move along further here with this downtrend into mid May and take a look at that multi-day reversal that Friday into Tuesday for Netflix. Again, a positive RSI and that MACD in positive territory. I think we have one last one that I will share with you here. We have lots more, of course, that we want to cover. And here we are with Walmart and their gap down this week, multi day. Huge volume characteristics. This is sheer pure distribution. And we can see that into today's close, this is a 1 hour. At the end of the hour, it did just dip up above these uh, 5 and 13 hour simple moving averages. However, our RSI is nowhere near that 50 and trending higher. And we can see that the MACD is still below that net neutral zero. So we'll keep an eye on that one. From here, there are certainly other areas that we can look at, but we're going to take a very brief break and we'll get to everything when we get back. And we are back. I did mention to you that there are pockets of relative strength that are being experienced in the broader markets. Part of my work, certainly every single day, I am screening the markets. I'm looking for those potential pockets of strength with an eye toward building a watch list so that when the markets do turn bullish, I am fully prepared. And that relative outperformance, particularly in a downward trending market, is one of those keys because if that stock is non-defensive in nature, the markets turn bullish, they will be the first out of the gate. So it's a critical component, certainly in the current market environment. So what we are looking at here again is a 2-month daily price chart view, and I have populated this list with stocks that are called dividend aristocrats. They are in the S&P 500. In order to be included, you have to have increased your dividend annually for at least 25 years in a row. A number of these companies have done so for longer. So let's take a look at some of these stocks because I've added that RSI indicator, sorted it in descending order. We can go ahead and update that. And the reason I'm highlighting this is because higher yielding stocks, value stocks are relatively outperforming at this time as growth stocks continue to underperform. As we move on, you'll see that in addition to that high yield, we want to see a nice, uh, a low PE. That's another key characteristic. So, uh, sorting this by relative strength up here in the forefront, we can see Exxon and energy stock, uh, utility, ED. We can just take a quick look here and you'll see that Consolidated Edison had this nice move to new highs, pulled back very orderly to this 50-day simple moving average, and then this week broke back above its shorter term moving averages. Nice outside momentum indicators. From here, you can ask for what is called the full quote, and it will provide you with their dividend information. Their yield is 3.3%. It's trading at about 22 times. So that lower multiple high yield characteristic is going to make the stock attractive. ED also recently put out some good numbers. So here we are with ALB. I'm just going to quickly pull up that full quote. We can take a look at some of the characteristics here. It doesn't have a particularly high yield, but it does have this nice characteristic of reversing its downtrend. It's in the specialty chemicals. This is an area that has been holding up well and is known to perform well, these chemical stocks, during periods of high inflation. So it's actually makes sense that we would see that one up at the forefront. Let's take a look at AMCR. We're not going to go through each of these. I am only going to share those that are representative of something quite compelling. But AMCR is a packaging company, 3.7% yield. And we can see that it is in a confirmed uptrend, getting nice volume on those up days. So let me just go back to this list because, again, rather than go through each and every stock, I did want to highlight specific names that are on the move. I did mention the healthcare and a number of higher pharmaceutical stocks, actually larger pharmaceutical stocks are on the move. So this is an exercise that I would expect you can very easily do on your own. I do have other names that I want to share with you, but here we are at the bottom, both Target and Walmart, part of that dividend aristocrat group. Down here in the doldrums, I talked about consumer staples getting hit. We'll just take a look at a couple of these because Procter and Gamble down very significantly, and then subsequently down the following 2 days. And of course, Procter and Gamble, in addition to having staples stocks, they do also have areas that are not as necessary, if I may, relating to certainly cosmetics and other departments. But a lot of these bigger drops, HRL, are in these consumer staples stocks that really took it on the chin. Here's Pepsi, and we can see Coke down rather significantly as well. So I'm going to take us a little bit outside of this area and share with you some stocks that are really looking quite interesting and really would not give you a hint as to what is taking place elsewhere in the broader market. So here we are looking at Bale. This is, I'm going to go ahead and pull up that full quote again. It is a Brazilian based company in that mining space. And let's take a look at some of these dynamics. Of course, a lot of these mining stocks going into this year have been relative outperformers, but even more important as it relates to VALE is the fact, I'll pull this up very quickly, that the Brazilian stock market, this is EWZ, we can see going into the beginning of this year, it has been the top performing area in the global markets. Of course, it has sold off here more recently, but it does appear to be coming back into favor. So a couple of these larger Brazilian stocks have a very similar look in the sense that they had super big rallies going into April and sold off. So some of the dynamics I'm looking at this point, given this sell-off, Vale is now trading at 4 times its trailing four-quarter earnings. So that's a super low multiple. The S&P 500 at this point is at about 18.8, the average multiple PE. And this 4 times is very attractive in a high inflationary period, and then a 16.1% yield. One of the drivers here, certainly coming into this 2 week rally, is the fact that Tesla inked a deal so that Vale will be providing them with nickel, which is one of the metals that they produce. Let's take a look at a couple of other stocks in here that are looking interesting. This is Dow, DOW, and they had a big run up into earnings, had very nice numbers, big volume, but we did subsequently get a period of a back and fill consolidation following this big run up. We can see your outside momentum indicators are positive, and then again, those multiples trading at 7 times trailing 4 quarters, a nice 4.2% yield. Let's take a look at another company here that is a French pharmaceutical company. This today, actually, they did receive US approval to widen the usage of a drug that is an inflammation reducer, but more important as it relates to this chart is this gap up in an otherwise dismal day, certainly preceding the move upward into the close, but we did get a nice gap up here, nice volume. And take a look at this, the black line up through the red, that MACD signaling that this downtrend is now confirmed into an uptrend, nice double bottom formation, positive RSI. So lots of good going on there. And I did want to make sure I didn't skip AT&T, which came out with numbers in April. They were negative, but above estimates. The subsequent increase in price is all about AT&T increasing their fees to subscribers for their network mobile phone. And we can see that that's in a nice uptrend. From here, I did want to share a couple of other of these larger pharma stocks. This is Merck in a very confirmed uptrend, also has nice multiple and PE dynamics. We are looking here at Pfizer, which had a nice pop today. Now, Pfizer, this recent move yesterday and today it rallied, is all about approval for their vaccine for younger individuals, and that is expected to drive growth. We can see the outside momentum uh, dynamics here in positive territory. And similar, Pfizer is trading at 10 times trailing four quarter, and then also that nice 3.2% yield. And then I did mention to you the biotech group up, and I did from here want to share with you some of the bright spots in that biotech ETF. And these are very heavyweight names. We are looking at Amazon, another name that is trading at a lower multiple, 14 times, and it does have a 3.2% yield. But certainly there are other dynamics besides that nice low PE and high yield. It's all about growth prospects. One other name we can take a quick look at here is Gilead. Not quite ready for prime time. I'd want to see a breakup above this 200-day, but it also has nice 9 times trailing four quarter earnings, 4.6% yield. And the company is really seeing a big improvement in their HIV drug sales. That's the big driver here. So it's not just that PE and the multiple, it's also all about that underlying potential growth. And we will leave it at that. Everyone have a great weekend. Look forward to seeing you here next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.